Identifying liquidity has never been easier. Now, I'm going to take a bit of a detour away from my main type of content. I'm going to show you guys exactly how you can identify liquidity. So you guys know about my stacked buy side and stacked liquidity concept, right? But here's where things get better. There are instances in which the stacked buy side and stacked sell side liquidity pools, they don't really get taken out for a long time. For example, you can have something like this, and prices just keep on going up, 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 right? That's probably because the drawn liquidity is on the left side up over here. And then later on only you can see prices drop down directly for these lows, right? So how does one actually go about identifying what stacked liquidity pool is high probability in nature? Well, there are two ways you can go about this, or rather there is one way with two different steps, okay? So the first way, or rather the first step is know your bias, okay? Know your bias. So how can one know the bias? How can you know the bias? Okay, you have one, by understanding the fundamental flow of capital, and number two, by using the bias prediction algorithm. Okay, by using the bias prediction algorithm. So you cannot do anything without understanding bias, right? Because if price can either go up or if price can either go down for either the stacked buy side or the stacked sell side liquidity pools, there's a good chance that you can get caught to a fake market structural shift. I mean, that's the reality of it. Okay, so if you can really understand how news events impact the flow of capital in all these intercorrelated and interrelated markets, it gets a bit easier. Okay, so if you are interested in learning how to utilize the news drivers to your advantage, right, feel free to join my free bias prediction group, which is essentially the free access that I'm giving you for 2 weeks, right? Alternatively, you can definitely join my masterclass, which is only $6. It's a masterclass full of value, and you can definitely be able to be, or you will definitely be able to make yourself profitable, at least just by watching them and by seeing how the news drivers themselves impact price. Okay, so number one, knowing your bias. Okay, number two, you have to know what is valid liquidity. Okay, so in order to understand what is valid liquidity, there must be some cause and effect scenario going on. Now, what do I mean by a cause and effect scenario? Now, you can see sometimes you have stacked buy side and price is not really, it's not really moving. It's just staying like this, staying like this. It's just constantly going low, constantly going lower. Even a market structural shift is not allowing this to get taken out, right? So there are two ways. There are two ways in which this in which you can go about this, right? Number one, price is already making its way down to another predefined stacked liquidity pool. After that is taken out, only will price go for this one. Okay. Number two, whenever we engineer liquidity like this, listen carefully. Whenever we engineer liquidity like this, like so, stacked buy side, you need to see price take out structure of some kind. Now, there are two types of structure that is going to have to take out. Okay, there are two types of structure that is going to have to take out. Now, if I were to draw a new diagram, check this out. Let's say we have a low here. Okay, price goes up, forms a stacked buy side, and now it's breaking down, right? It's forming a new low relative to this low. That is step number one. Okay. Step number two is it must take out this structure on the left side as well. Okay, this has to take out this structure on the left side as well. Hence the fake market structure shift. Okay, hence the fake market structure shift. So now what do you have? You have, okay, my bias is up. I form stacked buy side. Okay, I take out a low, validating my stacked buy side. At least there's one phase of validation that is done. And now my second phase of validation is here. Now what price can do is, okay, if we say if we have a bullish change in the state of delivery based on my CSD candle, if you have a manipulation based on my power of 6 concepts and my doubling theory concepts, you know that you can start buying once the CSD is present. Why? Because the CSD candle itself is what? The CSD candle itself signifies that the accumulation and manipulation is done. Okay, so let's take a look at this in terms of live price action, or maybe yesterday's price action, let's say on gold, right? So if you guys are following me on Twitter, be sure to follow me. If you're not, you can see that I call this entire up move and I call this entire down move. Okay, I said over here, right here, around over here, I said gold is going to dump. Dump it did. Okay, and after that, once the news released, I said all of the bears, everyone that was selling, they're going to get liquidated. And then I said before the day ends, they're going to be liquidated. So what constitutes the end of a day? The next day is 12 o'clock open. Why? Because the PM session is still New York session, New York timing PM, right? Still in the PM. It's not a new day. It's still PM. 5 p.m., 6 p.m., 7 p.m., 8 p.m., 9 p.m., right? So look at this. This was my target. Yeah, I didn't get in, of course. Actually, I think I did. I got in over here. It stopped me out, but it's what it is. See that? See this? 12. Exactly at 12. See that? We ran up, and just a bit more after that, we took out the high. All the bears were taken out. Everyone that was confident in their sales taken out 100%. Why? Because the numbers that we had yesterday was, yesterday meaning the 28th of August, 2024, they were bearish for the dollar. And so you can see it played out perfectly. Okay. So anyways, I'm digressing. Now, if you want, you can go check out my Twitter calls. I'll put the description down below. What a colossal fuck up. I put the link in the description down below. Okay. So look at this. Why did I say they're going to go here? Of course, my concept, yes, my daily bias algorithm, my session algorithm, my RTGS bias algorithm, everything said down. Okay. And then my other RTGS handshake algorithm said they're going to go up as well. Okay. So whenever whenever there's a discrepancy between the two, right? Whenever there's a discrepancy between the two, there will be a counter trend move. There will be a counter trend move that will target buy side or that will target sell side, right? So here at the start of the day, can you see 6 o'clock right there? Let's look at the 15-minute chart. That's better. Right here, where's the liquidity? But once we started the day, price took out this high, right? And look at how this high was valid, okay, which caused the reversal. See how, you see that? We have the stack buy side and price drops phase number one, right? Phase number one. And then we take out the left side of the curve as well. That's phase number two, right? So when we start buying, it would be sensible. It would make sense to not only stop here, we can stop here. Why? Because all of this is now stacked, right? And we took out double lows. Two phases are done. So we can expect higher prices. Now, having said that, once we took that out, then the buy side is done. Okay, once we took that out, the buy side is done. Now, look at it from the perspective of sell side. Okay, look at it from the perspective of sell side. Can you see here, right there? See that? See that mitigation? So, right? So we have a formation of stack sell side, right? Formation of stack sell side. It came down, and now see, two phases are done. So once these two phases are done, this is a guaranteed hit. Not just this, but this also. So you can say, Sean, why not this as well? Why not, come here? Because it's all here. It's all here. Everything is stacked over here. Correct. It is stacked. Correct. Right. But that doesn't change the fact that once we take out stacked liquidity, there will be a reaction. And then what do we have? We have a high impact news driver. Like I said, the fundamental flow. So now the fundamental flow is bullish. And if the fundamental flow is bullish at this point, right, what will price go for? Oh, at the very least, it will come here, no? Why this? Because look, stack buy side. One level done, second level also done. There. And why did it not stop and go up from here? Why? Because there was already a predetermined target waiting to be taken out because of what happened over here. So you got to think about all of that. Okay, this is valid liquidity. So once we start changing our state of delivery, once the fundamental flow is changed to bullish, right? You can buy here. I got stopped out, and you buy over here. There you go. And look, the reactions are beginning. Okay, the reactions are beginning. Now, same story. You can see it everywhere. Everywhere, any time frame. Remember when gold dropped over here? When gold dropped right here, right? Well, Why? Why? Because look, zoom out, right? Look at this. Right? Okay. What do we have? We have that. Also, we have this small one over here. See that? That's enough to constitute this as a stack cell side. So here is stack cell side. Here is phase one, phase two. Ah, phase two is also done. So why are we not taking this out? The fundamental flow is bullish. So this will be kept until it turns bearish after event, right? And over here, and over here also, we had news drivers that suggested bearish dollar. Ah, now what? Then from the moment you take your entry here, here, or wherever, this is your final target. Okay, this is your final target. Sean, now, why is that the final target? Why not here? I mean, look at this, nice and clean. Yeah, the data over here, the data released over here, it was revised. It was like this. It was bullish dollar first, and the data was revised to then bearish dollar. So because we are already in a bearish market environment, bearish market profile, this will be priced in first. Okay, this will be priced in first. Later on, once we take this out, once we take out sell side, the down Dixie will be priced in second. Now, what does that mean? From this point, if you understood that, okay, it's mixed data. If I'm going to buy, where am I going to take profit? Can't you see over here already? Look, what's happening? See this, okay? Look at this very carefully. Look now. We have that. What do we do? Phase number one, phase number two. This is now valid. So now we understand, okay, once we break higher, fundamental flow is bullish, right? Fundamental flow is bullish. This is valid liquidity. Price will hit that liquidity and then give us a nice reaction. So let's see if that is indeed the case. Oh, choppy, but still, it did the job. Right, it did the job. Because now, once we take that out, sure, we're going to get the reaction. Then we have new high impact news drivers. These new high impact news drivers will determine the next set of moves. So here, yeah, we got the reaction. High impact suggested that gold is going up. So at this point, what happened? Look, same thing, right? Up. That, guys, is how you validate. That is how you understand exactly which stack liquidity pool is going to go. And after that stack liquidity pool is gone, you can determine then, okay, based on the fundamental direction, based on the bias prediction, exactly what can happen. It's that simple. It's that simple. Okay. Now, patience or getting the trade is another thing. That's a you problem. But if you put your mind to it, if you have proper determination, if you know that, okay, I got to put in the hard work to get to where I want to be, anything is possible. All right, guys, so I hope you found this insightful. If you guys are interested in the masterclass in which I show you a lot of things, I also give you the bias prediction manual that you can use when you're using your 2-week free trial of the bias prediction. Again, no strings attached. You can just, no need to even put your credit card details. You can just use it, and you can definitely give me feedback, because I would definitely love to improve the product. And for the guys that are saying this is something new, bias prediction is something new, unfortunately, it's not. I've been working on it for a year now, I think more than 1 year. All this is coming from a place of hate. I feel you, right? Because a lot of people, they come across, they've been victims of so many scams and so many problems in the trading space. One mentor to the next, one video course to the next. I understand, but I don't tolerate bullshit. I don't tolerate negativity. If you're going to give me shit for no goddamn reason, best believe I'll make your life hell in the comment section, of course. All right. So that said, I'll see you guys in the next one. Good luck and good trading. And please don't view everything from the perspective of a victim. You are not a victim. We're all in this to make money together. Okay. Chillax, relax. Good luck and good trading. Bye bye.